I even saw there were investors that I know that the first 2 weeks of coronavirus, they are professional short-term rental owners. That is all they do. First 2 weeks of coronavirus filing for the mortgage forbearance, which shocked me that they didn't have any kind of reserve. And this is their only income. So that's very important.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me as always is John Cohen. How's it going?
Oh, we're doing good. We got a couple of recordings that we're doing today. So we got a nice fun day planned and some interesting guests. And overall, I got no complaints.
Yeah, can't really complain either. Only complaint I have is in Florida, and it was 35 degrees this morning. So wasn't too thrilled with that. Outside getting workouts done, and it was just like being back in New York. So wasn't overly thrilled. There was no snow or frost, luckily. Didn't get quite cold enough. But I thought in Florida we weren't supposed to get any of that. And lo and behold, here we are. So
it's funny. My a friend of mine, Mike, was in Jacksonville this weekend. His son had a soccer tournament, and he said, it was like 30 degrees in the morning, and he said it was absolutely freezing. No one was really prepared. And he lives in Charlotte, so he was, same thing. Just it's not supposed to get this cold down there. So yeah, I feel your pain, although I live it daily. So, but it's okay. The cold, yeah. I can deal with the cold. I'm not a big complainer of the cold.
Yeah, I'm sure my mom can relate to that story very well. We used to come to Florida the week between Christmas and New Year's. And some years it would be absolutely freezing. And then some years it would be like 80 degrees. And it was never anywhere in between. So I'm sure she knows that pain all too well, because it's a weird time, that's for sure.
Well, a couple of years ago during NMHC, which is right around this time in the January area, we played golf with Cushman Wakefield, and it was 20 something degrees in the morning. There was frost everywhere. And, I play golf up here and you're prepared, but I had shorts. I had to go to the store the night before and get a sweatshirt. And I was playing in sweatshirt and shorts. And they're like, yeah, you are crazy. You're from New York. I'm like, no, I'm fucking freezing, but I don't have the right stuff.
Yeah, no, it's a tough time to plan. It's a little bit of a bummer that there's not going to be an NMHC this year, but I probably wouldn't have gone anyway, so that's fine. What are you going to do?
Exactly.
But yeah, so fun times. It's 50 degrees now, so I can't complain. That's great.
There you go. It's a beautiful 55, day.
Which is great. Sure, all my Floridians and maybe our guest is cringing a little bit if that's still too cold, but for me, it's perfect. So I'm going to enjoy it while it lasts, and I'm counting down the days until I'm just going to be a puddle every single day. So it is what it is. But let's get into today's episode. We got a great guest on today. Excited to hear her story, learn from her, and just, chat. So with that being said, Avery, thank you so much for joining us.
Thank you guys so much for having me.
Yeah, absolutely. So you want to kick things off, just tell everybody a little bit about you, who you are, your background journey, and what you do?
Sure. So I am a real estate investor. I have 32 doors. I am also a real estate agent. I have a mega team at EXP called the Short-Term Shop. And what we do is we focus exclusively on short-term rental investors in the most friendly regulatory markets for short-term rentals, and also the most profitable ones. I kind of fell into this career accidentally, moved down from Brooklyn to Nashville. I don't live in Nashville anymore. I'm in Destin, Florida. It's 60 degrees here, by the way. So
nice.
We win. So moved down to Nashville from Brooklyn in 2013. I didn't have my real estate license at the time. I was a marketing manager in the music business, and our agent at the time was trying to get us to buy in a really hip, quickly appreciating area of Nashville. But having come from Brooklyn, we didn't want a lot of neighbors. So we bought something out in the country on an acre with no neighbors. But we thought maybe there's something to this, buying these properties that are really quickly appreciating. So we did that. We bought we didn't even know it was called real estate investing at the time. We knew so little about what we were doing. And we bought one. And our goal was to just maybe, sell it in 20 years when our future kids go to college. And we ended up buying one that was a really good one. We still own it, luckily, because we didn't know what we were doing. But as soon as we got that first rent check, we thought, oh, wow, this is something that we need to scale and we want to do. So then we started educating ourselves and listening to podcasts and reading books and learning what we were doing after we'd already done it. And we had one more down payment worth of capital left for like a single family. That was about all we could afford. So we thought, okay, well, what can we do with this that's going to bring us in the most amount of cash flow so that we can scale our portfolio faster? And we landed on short-term rentals, but we didn't want to do it in Nashville because the city council is always clashing with the short-term rental owners and Airbnb owners. And so we just didn't feel safe doing that. So we started thinking, well, where can we go that will be safe? And so we started thinking about areas where it's been the normal thing for people to go rent a beach house or a mountain cabin since the 70s. And, those are all mostly privately owned, not generally corporate owned. There are some. So places where it's not really normal to stay in a hotel like it would have been in Nashville pre-Airbnb. So we landed on the Gatlinburg market about 3 hours east of Nashville and bought a cabin there. And long story short, that did really well, scaled that into 5 of those pretty quickly within about a year and a half, then scaled that into 32 long-term doors because we do like to have a diverse portfolio. And so now back then I found that there were no agents in the markets that I was looking in for these short-term rentals that could really answer any questions about real estate investing in general or the return on investment on these things or how to manage them. We manage ours remotely from wherever we are. You don't actually need an on-site property manager to manage a short-term rental. And that's kind of what my company was born out of, is I became that agent. I bridged that gap of helping short-term rental investors because I knew there were a lot of people who were trying to do the same thing that we just did, but who couldn't get the answers that they needed. So we did about 150 million in short-term rental sales last year across 3 markets. So we have offices in the Smoky Mountains in Tennessee, the Destin, Panama City Beach area where I am now, I'm on 30A, and the Gulf Shores, Alabama area. And so we help investors choose the best properties and analyze. And then we also have a whole back-end education program for our clients where we teach them how to self-manage their property remotely so that they don't have to give up a big chunk of their gross income, which is typically about 25% for short-term rentals, to a management company. So they can then take all of that cash flow and then go reinvest, whether they want to do it in more short-term rentals or long-term rentals, but they just have a big chunk of cash flow going to utilize the way that they want to.
Mm-hmm. I love that. I think that's an awesome story. I think it's an area a ton of people are going to want to get into. And as you were talking, I thought of like 3 to 5 people I'm going to tell after we're done recording to listen to this episode, because I think they're going to get a lot of value from it. One of the things I want to ask you about, because as I was thinking, and it's something, we had some problems with on the small multifamily stuff and in smaller markets, is you build a team in an area and it's going well, or, you have somebody you rely on and then something happens to that team or that person and things break down, right? Because even though you're doing it virtually and you don't have to be there, somebody has to be there doing the stuff, whether it's cleaning, fixing problems, things of that nature. How do you tackle the problem of being in a more remote area like the Smoky Mountains? I don't know what the population is, and I'm sure the Gulf Shores and the Destin area are probably more populated, but not hugely populated like a Nashville or something like that. How do you view the risk of that, of like, hey, I have a team there and there's less people doing this, that something could happen, I have nobody there to help me?
That's a really good question. So when I'm analyzing a market for a potential short-term rental investment, so I'm looking at how much tourism comes, like how many dollars of tourism dollars they're doing, how many tourists are coming to the area a year. And if you look like at the Smoky, we'll take Smokies, for example, they're getting, the Smoky Mountain National Park gets 12 million visitors a year. It has been on an upward trend since the 60s. And pre-Airbnb, pre-internet, there were just a lot of local property management companies, big ones. They got to be pretty big, lucrative companies, but there's a lot of them. So while it is difficult to find a good, reliable person, there are a lot of people who know how to clean short-term rentals, because that is a really big industry in the area, really the only industry in the area. So, there's going to be X amount of people who have worked for a property management company as a cleaner at one time or another. And the process is exactly the same for flipping a cabin if you're working for them or working for a private owner. So while the labor pool can be a little bit shallow, with anything to find good help in any industry, things that exist now that didn't exist when we started are local Facebook groups, local owner Facebook groups. I personally don't share my own cleaner because I don't want her to get too busy, but a lot of people do. So I stress to my clients, we teach them how to find cleaners. We also have a list of cleaners that we recommend, but we teach them how to find them. There's a few Facebook groups in any market. There's going to be owners Facebook groups. And it is important to get, have your A cleaner. You don't want to have like a B team cleaner that the A and B team know about each other, but you do want to just have a couple contacts in your back pocket for if something goes wrong. And for me, it works well because I've got the cleaners in these areas. There's so much traffic in the peak seasons that they kind of stick to their own little districts. So I have 2 cleaners anyway, because they're in separate parts of the market. Like they're probably about 20 minutes away from each other. So if something were to go super wrong and I could not get a hold of one of them, like somebody went to the hospital or something, I could always call my other one and say, hey, we're having an issue with these over here. Can you, and they already know how to clean my places, where we keep things like that.
That's awesome. And I think you touched on something that's really important that John has talked about several times on the property management side for multifamily, and that it's having that B team or that somebody in reserve that you can turn to if something happens either in the short term or permanently with the person you're currently using. You have somebody already in mind that can kind of step in and you have some sort of relationship with. And yeah, maybe there's some choppy waters while they're picking up the slack or you're making that permanent change, but at least it's not you're scrambling to find someone and you're already behind the 8 ball, so to say. You kind of already have an idea of, hey, if this happens, because it's a very real possibility, here's the next step I can do or somebody I can go to. So I think you touched on something, super important when you're talking there.
Awesome.
Yeah. So it sounds like to me, when you're looking at markets for the short-term rental space, you're hyper concerned upon the tourism aspect rather than the local economy, so to say. Is that accurate, or is that something you're also looking at too?
So we're looking at that too, but I only invest. So the markets that I'm in, it's not an option. It's not a place where, none of them are places where you would, if there was something to happen, like a bomb would go off, or we would have thought a pandemic, but it ended up actually being a good thing for my markets, where all the short-term rentals had to shut down, your chances of just being able to convert that to a long-term are very slim. There are more short-term rentals in these areas than there are people who live there. So that's a good thing in my mind, because you don't ever have to worry about the rules changing on you. And then with coronavirus, we can go ahead and go there, because I know that's a big question in people's minds about short-term rentals. So yes, we did get shut down for about a month in the midst of, the biggest part of it in March and early April. The Great Smoky Mountain National Park was shut down, and then Florida short-term rentals as a whole were shut down. The Smokies, we were allowed to operate, but there was just, the main tourism draw wasn't there. So what we were able to break even just solely based on people in drivable big cities from our markets who wanted to work remotely from a vacation spot. So we did all right. We didn't have to dip into any cash reserves, which could be a conversation for an entire other podcast. But we needed to, we could have. So we were able to weather what I would consider a worst case scenario for about a month and a half and still break even. After that, all these markets kind of exploded, and many drivable vacation home destinations in the entire country did, because people were dying to get out of their houses, but they didn't want to get on planes and they didn't want to go to big metro areas. So what they were doing, so they could control their own environment, doing 5 to 8 hour like weekend destination vacations. So, we saw higher prices per night than we've ever seen, and we would have been booked solid anyway, because it was coming into the summertime, but we got some crazy prices. So I wouldn't invest in anything based on 2020 numbers, because they're weird, but 2019 and 2018, totally great too. So anyway, we are trading being able to convert to a long-term rental for favorable regulations and heavy tourism. So we invest based on what's going to happen 99% of the time, rather than what could happen 1% of the time.
Mm-hmm. So when you guys are looking at these deals, because I think people are intrigued by this, this new, not new investment, but it's become more widespread over the last couple of years. What type of vacancy in the vacation areas do you like to see or to underwrite to, or how do you advise your clients on vacancy numbers?
So we look more at gross annual income. And a good example is that, so the Smoky Mountains only have like a 2-month low season. So March to December, you're really, really booked. Whereas like Destin, where one of our other ones is, it's March through October, but we make about the same across the course of the year. So it's really more about the annual income. It's really difficult to look at things based on an occupancy rate standpoint, even though that is very important. So like the Smokies, you're looking at an 80% occupancy rate, whereas the beach markets that we're in, you're looking at more like a 67% occupancy rate, but our income over the course of the year is roughly the same.
So it's more income approach. How much money can I collect and how much money is it going to cost me to run, more than, I want it to work at 25% vacancy or whatever that looks like.
Yeah. So if you look at it from a cash on cash return standpoint, that's probably the best way to analyze them. What I'm about to tell you is not any sort of real estate investing metric. It's just an observation that I've made for myself and my clients. So you can expect to net after your mortgage and everything, assuming you're just getting a conventional loan and not a commercial one, you can expect to net between 35 and 45% of your gross, depending on how new you are to the market. Depending on the size of the property is also going to determine what the gross income is. So the higher number of people that can sleep, the higher the occupancy, the more money you're going to be able to make to a point. So the real line of where the efficiency, maximum management efficiency and maximum cash on cash return comes at like the 4-bedroom mark. 1 through 3 bedrooms are going to do exactly what you need them to do. That's what I started with because I just bought what I could afford at the time. But I did recently 1031 exchange a few of my smaller ones into a few larger ones.
Mm-hmm. Yeah. When I was learning about this more and looking at how people analyze deals and markets, one of the things I saw was what some people looked for was they would actually look in an area and analyze listings, and they would try to find gaps in the market for the number of people that could sleep. And they were looking for, like, oftentimes it was the really large ones, right? Because it's pretty easy to find, like you said, ones that do, 1 to 3 bedrooms, which probably sleep anywhere from, 2 to 8 people, I would imagine. And they were kind of looking for those areas where they had a real drop off in the number of listings from, if it was, 40, 50 listings for 6, 7, 8 people, and then you had to drop down to, 3 to 10. Is that kind of the same premise behind why you went into that larger stuff, because there was just far less competition in that space? Or was it, kind of your annual income to the price you were paying was a better ratio? Like what do you think is making those more successful?
Sure. So it's really more, so for example, I've got a 2-bedroom that it grossed about $55,000 last year. I have a 4-bedroom that grossed about $105,000. These are both minus a few months because of coronavirus shutdowns. Right. So I over doubled my income on the 4-bedroom, but the 4-bedroom expenses are only about, I would say, 20% more than what my expenses are on my smaller ones. So it's the same exact amount of work. And you can take a look at what is available in the market and go that way. But at least in the Smokies market, the 1 through 3 bedrooms, even though there are a ton more of them, they still can see upwards of 90% occupancy rate just because there is so much tourism. I would say after about 8 bedrooms, it's kind of a diminishing return. You don't need to get a 20 bedroom to maximize your returns. Between 4 and 8 is about where you need to be.
And just to clarify, do you mean actual bedrooms or the amount of people it sleeps?
Yeah, bedrooms.
Do you see people that buy stuff with, 10, 15 bedrooms? And
I do. I do. They are generally very, very experienced short-term rental investors. I have one client who buys them that big, but I mean, he's owned condos in Austin for like 20 years. He was a really early adopter of everything to do with short-term rentals with Airbnbs. So I would feel comfortable with somebody like that doing that. Whereas if somebody who's brand new, even if they have, plenty of capital to do it, I probably would not suggest going that big, just because you are, after that 8-bedroom mark, your margins for who is going to rent that become very, very niche.
Mm-hmm. Gotcha. I think that makes sense. What are some of the things, as people come to you and, are newer, don't fully understand, what are some of the like larger either misconceptions people have, or like the things that they think are like an extreme downside but isn't so bad? What are the things that you find very common with people that aren't necessarily true?
So the biggest one is that they feel like they have to be in the town that they're investing in order to invest in the property. And I mean, I think that new investors feel that way regardless of the asset class. If they're buying a 20 unit, they're still going to feel uncomfortable if it's across the country. So that's one. And people, it can be really exciting when you first get a listing going and you're starting to see a lot of money come in, and it's important. I see a lot of new investors, or even kind of seasoned investors who are new to the short-term space. When they start seeing that roll in, they kind of go a little nuts, and they're like, I'm going to start a property management company, and I'm going to do a short-term rental syndication. I'm going to get everybody to give me their money because I look at all this money that I've been able to make. And it's just important to kind of slow down and just at least wait for your first bad guess to happen before you just go nuts and start trying to buy the whole world and start new businesses, and just, calm down. And it's, which is good, it's good for them to be excited, but it's also good to just chill and see what happens before you make your next investment.
Mm-hmm. Yeah, I think everything looks great until you start running into those bigger ticket items. And I think you probably touched on one of the, the scarier items, or probably the things that holds people back, right? Is in any real estate, any rental type of thing, is either, bad guests or bad tenants. What is that process like when you have a bad guest? Like, how often does that happen? Do you typically see? What are the typical results? Like, is it just stuff that's dirtier than usual? Is it damages? Is it real big problems? Is it just relationships with the neighbors, if there are any? Like, what are kind of the more usual results of quote unquote bad guests?
For us, we run into more problems with just general communication and being able to please people. Like with our long terms, we can pretty much expect, because they're in C-class neighborhoods, that when people move out of those, that we're going to have to, do new carpet, new appliances, new paint, everything. So, because they're doing God knows what in there for a year and a half or however long they live there. Whereas with the short terms, they're being professionally cleaned, every 2 times a week, maybe. So we don't really run into damage as much. And we ask a lot of really good questions up front to just make sure that people aren't coming to party. Like, you can get around that with a 25 and up age limit. But most of our issues come with people being impossible to please. Like, people just being completely unreasonable, like moving the appliances out from the wall and seeing that there's dust under there and then complaining. So you just kind of have to tailor your communication to mitigate some of that stuff. But that's the biggest thing. It's more of that, and people not understanding the difference between, okay, I'm staying in someone's house and I'm staying in a full service hotel where they're going to come change my sheets every day. So it's really just managing the communication that is a little more difficult than anything else. And we've gotten damage every now and then, but it's not, people read a lot of horror stories about owning Airbnbs online, but people aren't going to post blogs about every great guest that they've had that they didn't have to really even communicate with at all. Mm-hmm. So I would say we've only really had damage like once somebody broke a door, and that's across 7 properties over 5 years. So it's not too bad.
Mm-hmm.
So I know you had mentioned age is one way, but like, what are other screening things that you guys use? Because like you said, someone fills out something online, what other questions or what other hurdles can you put in there to sort of minimize who you rent to and minimize potential headaches?
You would be surprised how much people will tell on themselves. So if you just say, oh, we're so glad you're interested in our property, what brings you to our neck of the woods this month? And they'll tell you, oh, this is a perfect place for my friend's bachelorette party. And then you're like, oh, I don't know if we are going to be comfortable for you. Or they'll pretty much let you know exactly what kind of a guest they're going to be without even realizing it. So that main one knocks out a bunch of people, and you can't screen out all the bad ones. We do use Ring doorbell cameras and floodlight cameras, and you don't want to watch those like religiously. But if anything, you can tell if, people are bringing in 20 people and they only booked for 3. And you don't want to yell at somebody for booking for 3 and bringing 4. That's fine. That one extra person is not going to burn the house down in most cases. But, you can see if they're going to be partying well before a party happens.
Makes sense. And then what about deposits? Like, could you weed people out like with either a higher or lower deposit, or what is your typical deposit? What do you recommend people do for, deposits or credit cards?
You can do that on Vrbo. That you can set the deposit for whatever you would like. On Airbnb, they pay a $500 deposit to Airbnb. And then when they check out, if they've done anything wrong or broken anything, then you have to file the claim with Airbnb to get it from them, which is a sticky situation. The platforms can be kind of guest centric when it comes to stuff like that. So it can be kind of a headache, but that's the way it works typically.
Makes sense. Now, I know you mentioned Vrbo and Airbnb. What other places do you list, or where do you see? Is it just, I know you list it everywhere, see where they come from, or is there a better demographic for a site, i.e. like a social media, like Facebook's different than LinkedIn, so on and so forth?
So we stay so booked with just Airbnb and Vrbo that we don't bother with the turnkey, Flipkey and booking.com and places like that. Just because, and we did try those to start out, but we would just get like a booking a quarter and it wasn't worth messing with. Generally the Airbnb users are going to be more tech savvy. They're going to be younger. The VRBO users are going to be like, my parents' age, which is 50s and 60s. And, it's our bigger properties seem to get more bookings on Vrbo than our smaller properties, and the smaller properties get more bookings on Airbnb. And that's about it. So you can't really get away with not being on either site. I know plenty of people that list only on Airbnb and then some that list only on Vrbo, but you really do need to be on both. And there are plenty of others that you can add to that, but we stay really, really booked on those two. So we just streamline it to them.
Makes sense. I think another big one, I know you touched on it briefly, early on when you picked the 3 markets you picked, how do you navigate, or what do you tell people when you're recommending to clients on the navigation of the legal side? Because I know, someone brought a deal to me a couple of years ago and they wanted to rent an apartment in the city. And I was like, that's the worst fucking idea I've ever, New York City. Yeah. I said, that's the worst idea you could possibly have. Cause I don't care how much money you can make, but there's a lot of things that are stacked up against you. So what are tips, tricks, or how do you navigate that legal side of, the ever-changing market on short-term rentals and local government's restrictions?
That is a really great question. So a good rule of thumb is to just stay out of metro markets altogether, like Nashville, New York, San Diego, all of them. You can read tons and tons of stuff online about the clashes that they're having and the changes in the rules. And this is illegal now and it didn't used to be. You can look, what I found is another good rule of thumb. So there are markets where, like the ones that I'm in, where Airbnb is partnered with the local municipality, whether it's the state or the county, to collect and pay the local occupancy tax on behalf of the Airbnb owners. So generally those are going to be favorable areas because Airbnb is already working with the local government to make everyone happy. There is a website called Rent Responsibly that kind of puts that all together for you. So if you have no idea where you want to buy, you can just kind of go through and look and see who's the most short-term rental friendly. But on just a even lower level than that, just think about a place that you went growing up, like maybe with your parents on vacation, where you would rent a house rather than a hotel, because the less the hotel presence, the better the regulations for short-term rentals are going to be too.
That makes sense. Makes a ton of sense.
Mm-hmm. So what are, when you're looking at deals and analyzing deals and talking with clients, what are people's kind of expectations on like the debt they can get, the type of returns they're making. You talked about cash reserves. Like, if somebody's looking at some of this stuff, what are some of the expectations they should have?
I would recommend having at least 3 months reserve to start out, just in case something crazy happens. A lot of the short-term rental specific insurance companies do cover for lost income due to bed bugs or guest damage, things like that. But you do need to have cash reserves, and a lot of people get so caught up in scaling so quickly that they don't have that safety net. And I even saw there were investors that I know that the first 2 weeks of coronavirus, they are professional short-term rental owners. That is all they do. First 2 weeks of coronavirus, filing for the mortgage forbearance, which shocked me that they didn't have any kind of reserve, and this is their only income. So that's very important.
Mm-hmm. And you talked about something too. I know, I think like Airbnb, I don't know about Vrbo, I think they offer some sort of insurance, but it sounds like you think people should be getting additional insurance on top of that. Is that right?
Oh yeah, definitely. I would not rely. I mean, it's nice and makes you feel warm and fuzzy that those two platforms have that, but you definitely need to get your own and very good insurance. I've never had to use it, but it's just, you want to have that in place for sure.
Mm-hmm. That's the purpose of insurance, right?
You're right.
When you need it, you better have it as opposed to the alternative.
Right.
Switching gears a little bit, because I think, you found a niche and scaled it to a nice sized business on the real estate side. How does any potential real estate agents listening or anything like that? I mean, I think EXP is a great company. I think they're doing really cool things, but how does the real estate component, how does that fit into either targeting to get listings, looking at deals on the market? What do you do there to help your clients where they say, okay, yes, Avery is my go-to because she does something, you don't have to give your tip out, but how can you use that real estate platform to shake free deals, or how can you list the house knowing that maybe there's more potential than just a regular traditional sale?
That's a really great question. So I use, just like any agent that works with investors of any kind, somebody who does a lot of multifamily is going to know how to do a pro forma the correct way. So we use a lot of analysis and helping buyers analyze, but also helping, if we're on the listing side, make sure that we have a pro forma, which a lot of residential agents don't do. Even the residential agents get investment listings all the time without even realizing it, and they just list it, they just throw it up there. But if you show people, okay, these are the potential numbers you can do, then it's super helpful, because a lot of times the agent on the buying side isn't necessarily an investor agent. They just have a client who might want to buy this. And so they're not doing that analysis. So if you just present it, put it on the MLS or wherever you're going to put it, if it's off market or whatever, present them with the analysis so that they know, okay, this is kind of what I can expect. I need to verify myself, obviously, but you'd just be surprised how many people just don't help with that analysis. So basically, we just pretty much all of the agents on my team, if they're not short-term rental investors, they are investors in some form or another. Like, I've got a few serial house hackers. I've got a commercial guy who sells short-term rentals for me in Florida. So they all at least have that investor background in some capacity to help with that analysis. So it's not just like this town is nicer than this town, therefore this is going to do better, because we all know as investors, that's not necessarily true. It's more about the numbers.
Mm-hmm.
Makes sense.
Yeah. I think you touched on something earlier too, that's helpful for agents, in that you said you had a lot of you can provide people with cleaners, and you can provide, you're talking about the pro forma. I think, especially as you're dealing with new investors, having a lot of that information for people readily available, or the resources or the information that they're going to have to find one way or another already for them, I think is an incredible value add as a service provider for them. Not only, trying to bring them a deal or, list their deal, you're going to just attract way more people that are looking to do this. And if you can help them out in other ways, helping that person out by finding a cleaner, they're going to reciprocate in one way or another, right? That's just kind of how, we work. And whether they do it or not, it's, nothing really, off of your back. It's stuff you were going to find out anyway, and information you were going to gather anyway, just for yourself, but it just provides a higher level of service for people you're trying to either, sell a house to or sell a house for. It's just going to lead to more business for yourself. And I was having a very similar conversation with two brokers here. Basically, they're talking about, when they're looking to sell a deal of, putting together a package of substantially more information than you typically see to provide a higher level of service, especially with people who aren't as educated, right? Some of the deals we look at where they're $50, $100 million, people are going to, know what they're doing, hopefully at that stage, and, don't need as much handholding. But when you're dealing with the one-off investor, whether they're buying a short-term rental in the Smoky Mountains or, a 5-unit in Orlando, Florida, good chance they're not going to know as much as seasoned investors who are looking at bigger stuff. So the higher level of service, the more information you can provide that person, the more resources you can provide that person. I just think the more business you're going to generate, probably very quickly, but over the long haul as well.
I agree. A rising tide raises all the ships.
100%. So what are you seeing in like today's market as, I know there's so much going on, with COVID and so much uncertainty of how things are going to progress, how quickly, who really knows what the future is going to look like. Is it a one-off thing? Does it kind of evolve into a flu type thing? Who the hell knows? But are you doing anything differently as we're now, almost a year into this, period that you weren't doing prior to?
We have made sure to have a little section in all of our listings that say there's a remote workspace and that the internet is, X amount of bits or however you measure internet. So to make sure that people know, okay, your kids can do the remote learning here. You can remote work here. We were working on getting into some bigger multifamilies last year, but stopped that because we didn't feel like at the very beginning of an eviction moratorium was a good time for us to get into a new asset class. So we bought a few more short terms because we had seen, okay, this seems to have positively affected the short-term market and we don't want to just sit stagnant. So we bought a few more of those. And now that it's kind of looking like we're on the back end of COVID. I don't want to have to eat my words in a few weeks, but it kind of seems like that. So now we're back into the multifamily space because that's our BHAG for this year is to get into some good sized multi deals. So.
Gotcha. You don't have to worry about being on the record. I'm pretty sure I said several times that I thought it was going to be over in like a couple weeks or a couple months. So you'll be in a very well-known club. So don't worry about that. But yeah, I think go ahead.
I was going to say I'm wrong all the time. I think this is the only one that I might've gotten sort of right. But it being wrong in this regard, nobody knows, right? Whether it's no one has any idea at this point.
Yeah. I do think you touched on something, or you did something that's interesting about, looking, I guess, kind of at like the risk reward of going into a new asset class. And I think so many people are so eager with like, the shiny object syndrome to go into something new because they think the grass is greener or they want to diversify and things of that nature. I think they fail to recognize the learning curve of going into a new asset class, even if it's so closely related, even just, from single family to multifamily or short-term rental to, long-term rental. There are little quirks and differences that you have to take into account. Like, you were just saying earlier about the short-term rental about, I think you said 35 to 40% of your gross income will go to your expenses, including your mortgage. That is not at all the same for long-term multifamily in the B and C space. It's going to be somewhere between probably 60 to 80%, depending upon, the rent and the taxes and things like that. It's a very different understanding of it. But if you went in to buy a deal and you thought it was going to be, 40% of your expenses and mortgage were going to make up, the gross income for a long-term multifamily, you would have been very, very wrong. Even though it's, not dissimilar to what you're doing. So I think it's, one, kudos to you for kind of recognizing what's going on and, doubling down on what you already know instead of taking adverse risk. But I think it's also a good lesson for other people, understanding of like, hey, there's a time and a place to go into something new, and that there is going to be unknown things that pop up as you go into it, even if you do have, a ton of information in something that's very similar.
I agree. And we did, over the course of the past year, we were going into multi last year, looking in a completely different market than the one that we're pretty much getting into now. And had we not had that 6 to 8 months, 9 months of extra research without really even being able to pull the trigger on something, we might have made, I think we've made a better decision now than the one we were going to make last year. Mm-hmm. So, I definitely don't want to advocate analysis paralysis, but multi is a completely different beast than short-term. And even single family long-term is a completely different beast than those other two markets. Other two asset classes as well. So, it's definitely good to not get that shiny object syndrome and just think you're going to go buy the world of every kind of asset class because you had success with one property on the first go. So it's very important to make sure you weigh your options really carefully.
Mm-hmm. So let me ask, because I think, a lot of people that come from the long-term rental side probably want to get into short-term because they hear, about higher returns, less hands-off, things like that. Why are you guys kind of looking to go from, I know you guys have some longer term doors already, but why are you looking to go from that, short-term rental or the single family into the multifamily stuff?
So for us, our goal was never to just have this giant fleet of short-term rentals and be a short-term rental empire. Mm-hmm. Our goal was to generate more cash flow more quickly so that we could scale our portfolio. And multi has always been the goal. And some people's goal is to have a giant short-term rental empire, and that's fine. There's nothing wrong with that. That's the beauty of short-term. The beauty of real estate investing is that there's no wrong way to do it. There's a way that's going to work better for you than other people, and vice versa, depending on what your skill set is. And so our goal is just to use the short-term rentals as little income turbochargers to get the cash flow going to be able to scale into bigger properties, which at some point becomes a big multi. And get into that space. So we're not finished buying short-term rentals. We'll probably buy 1 or 2 this year, but the goal is to scale into the big kid stuff.
Mm-hmm. Yeah.
I think that's so smart, knowing that, what you have to do to achieve the ultimate goal. I think all the strategies out there work, whether it's house hacking, fix and flip, short-term rentals, multifamily, whatever it may be. I don't think people do a good enough job working backwards to realizing that this is the plan to get to the finish line. And some people get blindsided by, wow, I'm making so much money on this. But, sticking to that goal and using that as a tool to get there, it just shows the motivation and determination to get there. I think that's the missing piece for a lot of people's, long-term financial freedom or whatever you want to call it, is knowing that this is a tool that I'm going to use because it generates more cash. So I pat you on the back there and think that, that's amazing that you're sharing that so people can hear it. One question I have, or something to, cause you do it so well, you help clients find it. What's the, one positive, one negative, or the biggest positive and the biggest negative to short-term so people can realize it as a tool or as a investment decision that they want to move forward with and scale it to a larger platform, in your opinion?
The biggest positive is the cash flow for sure. The biggest negative is that it's not just a sit back and watch it happen passive investment. You are having to deal with guests. Is it easy work? Yes. But is it still more work on a day-to-day basis than long-term rentals? Yes, it is. So it's not passive.
And I'm sure you probably see a lot of weekend stuff that you have to do, because people, if they are working, I know this year was a little bit different or last year was a little bit different, but I'm sure you get probably a little bit, more phone calls than some people would want on those days where most people want off. Am I correct? Or is it, hit or miss?
It's hit or miss, but is it going to interrupt your dinner or your family time at some point? Absolutely. And you just have to weigh that against the cash flow that you stand to make. And is it worth it on, your journey to whatever your end goal is? And for me, yes, it is. So it's okay if I have to take 5 minutes and deal with, because the most time it's going to take is you're going to have to make a few phone calls to get the correct person out there to deal with whatever the situation is. But to me, it's worth it to get to the end goal.
Perfect. Gotcha. I think one last thing I wanted to ask too is on the debt side, right? Because I think a lot of people understand how debt works on the multifamily and the single family side, or it's a little bit more easier to find. I think on the short-term rental side, it's probably talked about a little bit less. Is it kind of the standard, 20% down type of loan? Are there other options for people? I know you talked about I think you mentioned commercial loans. I don't know if it was for the short-term rentals or not. How do you see people, getting loans on these deals?
Generally, it's a conventional investment loan. There is one product that Fannie has that is pretty awesome that people utilize a lot in the short-term rental space, but you can only utilize it if you're self-managing. It's called the 10% down vacation home loan. And there's a few stipulations to that because it is great. It's obviously half the down payment. The interest rates are better than a conventional investment loan, but the property has to be 65 miles or more from your primary. And you can't put any kind of a contract or a lease on it or anything that takes control away from you as the owner. You have to intend to stay there for 2 weeks a year. And so that's why you can't have a lease on it, because you wouldn't be able to do that. And so definitely check with whichever lender you plan to use, check with a bunch of lenders, but most people utilize that on the first one because there's nothing in any of the guidelines that says you cannot rent your property out when you're not using it those 14 days. So that's a really, really great option to get in there, quicker than you might think. Gotcha.
And is it kind of like when you do like an FHA or something like that, like there's that 12-month timeline where you have to do it? I know it's kind of still the same thing. So you can't do more than one inside 12 months?
In the same market. So you can have one per market. So you could, like, if you wanted to go buy in the Smokies and in Florida and in Gulf Shores this year, you could do that. You could use a 10% down. Depending on the lender, some of them say you can only do one per market, like forever, or some say one per every 12 months. And then you can convert the previous one to a conventional investment loan. Just depends on the lender, and, definitely get their advice on that because everybody's financial situation is different, but it's kind of how it works.
Awesome. Great. I think that's a great place to wrap up. I think you gave people a ton of information. I know I definitely, learned several things. I'm sure John did as well. If people want to learn more about you, get in touch with you, follow you, where can they do all that stuff?
You can find me on my website, theshorttermshop.com, or Instagram at theshorttermshop.
All right. Awesome. Guys, definitely go check her out. I know that was a ton of information. I'm sure there's plenty more. And if you guys are interested in buying stuff, I'm sure she's going to be a fantastic resource for you guys going forward. But thank you guys so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to someone that would get a tremendous amount of value from this episode. It would be helpful for us. Word of mouth is everything. Avery, once again, thank you so much for coming on. This was awesome.
Thanks so much for having me.